Hello everyone. In the next few minutes, I am going to take you through some of the key events of the recent past and Kotak Mutual Fund's view on equity market. During the month of July, Nifty registered a strong up move of about 6%. This was once again led by a handful of index heavyweights, thus making the market further narrower. The mid and small cap basket continued to show more volatility and fared much worse than the large cap basket as measured in terms of Nifty index. The current equity valuations continue to be higher than the long-term average. While micro fundamentals are clearly on the mend, the macro challenges still remain very high. Many of the high-frequency indicators in June have remained buoyant. Total credit grew at about 14% year-on-year in June, a 19-quarter high. Similarly, bank credit growth at 12.8% at end of June was at a near 4-year high. Even core sector growth in June rose to a 7-month high of 6.7% due to double-digit expansion in coal, cement and refinery products. As far as the ongoing earnings season is concerned, until now it has been largely in line with expectations and bodes well for the markets tracking mid-teens double-digit growth in financial year 19. IT sector and retail private sector banks have delivered in line with expectations. In case of corporate focused banks, slippages appear to have peaked, credit costs are likely to remain elevated and normalize towards second half of financial year 19 and financial year 2020, translating into better ROAs and ROEs in financial year 2020. Consumer staples as well as discretionary businesses have done well on volume growth during the first quarter. However, auto sector earnings have been quite disappointing even though the volume growth remains strong, indicating margin pressure. Whereas micro fundamentals have started to appear strong, the macro risks in terms of currency, crude and interest rate movements still remain. Political developments are also uncertain at this point of time. Going forward, the market is likely to be driven by earnings season and the progress of monsoon in the short term and will largely be dependent on politics in the second half of financial year 2019. While in the past few weeks, mid and small cap stocks have corrected more than the large cap stocks, the premium valuations of mid and small cap segments still continue on a relative basis. In a market which is trading at a relatively higher valuations as compared to the historical averages and also very narrow in breadth, the risks remain elevated. We therefore advise equity investors to take cautious approach. We advise all investors to make disciplined and regular investments with long-term in focus and not chase any momentum in the market. Before I conclude, let me also use this opportunity to thank all investors and partners who gave us overwhelming support in the recently concluded NFO of Kotak Balance Advantage Fund. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.